Is more of a melt-up on the way for equities? Joining me now on the line is Dennis Gartman. Dennis, good to have you back on the show.
Well, you guys are obviously scraping the bottom of the barrel, and there I was, so honored to be asked.
Absolutely not, Dennis, but let's talk equities now. And to say that they've enjoyed a run this summer is the understatement of the year. Last week in an interview, you were saying how you are expecting more of a melt-up in equities. Is that still the case this week?
Well, we are, in fact, melting up. We just continue to make new highs, and the odds are we will continue to make new highs. Every smart guy, every smart woman I know keeps trying to pick the top. I've even tried to do it from time to time over the course of the past 6 or 7 months, and every time I did it, I might have gotten lucky for a day or two, but ended up having to come back and buy everything back at a higher price. It's still a bull market. Sometimes it's just the best thing to do is take a simplistic perspective and just simply say stocks are going from the lower left to the upper right. The monetary authorities are continuing to be expansive. The economy is doing better. And as long as there are not any untoward geopolitical risk, that which has been happening is likely to continue to happen. Now, that doesn't mean we can't have another 2 or 3% correction such as we had in the first several days of August. And as everybody knows, September is usually an ugly month, so pull your stops up behind you or buy some puts, but the trend is still from the lower left to the upper right. The bull market is still intact, and prices will likely be higher 2 months from now than they are now.
So ride the wave in essence, Dennis.
It's the easiest thing to do. An old friend of mine who's very well known in the business, and I won't use his name, but was once asked, who's the best trader you've ever seen? And he said, well, it's without question my 4-year-old nephew, Bobby. Because I can hold a chart in front of Bobby and say, Bobby, what's that doing? And Bobby will say, well, that looks like it's going up to me, Uncle Paul. Or I can hold a chart in front of him that's going from the upper left to the lower right and say, Bobby, what's that doing? Well, that's going down, Uncle Paul. Sometimes thinking like a 4-year-old, looking to see what the general trend is the best way of trading, the best way of investing. Sometimes we make it just far too complicated and get in our own way.
And I'll be sure to get my 5-year-old niece's thoughts tonight, Dennis, but let's talk geopolitics now, which is really the best way to sum up the summer thus far. And you've said in the past that when war is in the air, gold goes bid. How do you see the gold market set up here?
Well, I've been bullish of gold, not in dollar terms, and people get very confused and upset with me when I explain it this way. But I've been bullish of gold for a long time, for almost 2 years now in terms of yen, and I've been bullish of gold for the past 6 or 7 months in terms of euros. And actually, I'm up on the trade. Now, I'm not sure that there are many people who can say that if they've owned gold in dollar terms over the last 2 years, the best they can do is probably say that they're down 6 or 7 or 8%. And if you've owned it from the highs, you're down 30-some%. If you've owned gold in terms of another currency, and I think gold is nothing but another major currency. It is no different than the dollar. It's no different than the euro. It's no different than the yen or the Canadian or the Aussie or the Kiwi or the Mexican peso or any of the other currencies that are out there. It's just another currency. And currency traders tend to trade one currency against another. We cross them one against the other. And I think that at this point, given the monetary authorities who have been expanding the supply reserves in Japan at a very heady pace and are likely to continue, are going to devalue the yen in terms of dollars and have been devaluing the yen in terms of gold. And I now think that the ECB, having been pressured, and this week has been especially important when you've seen several members of the French cabinet stand down and topple the government for a day or two, predicated upon the ECB becoming more expansionary, and the ECB will have to become more expansionary and will have to adopt quantitative easing. If that's the case, gold in euro terms goes up, euro goes down relative to gold. So I'm really quite bullish of gold in yen and euro terms. I am absolutely, utterly, totally, completely, without equivocation, neutral on gold in dollar terms. It seems to be comfortable right between 12.85 and 13.15, and I doubt it's going to break out anytime soon.
Dennis, now let's look to the U.S. You mentioned Europe, but do you see interest rates rising back home, given the Jackson Hole meeting last week? I guess the question is, should they be rising?
No, they shouldn't be rising. Certainly at the short end, they shouldn't be rising. And no, they are not going to be rising anytime soon. If anytime soon means the next 3 to 6 months or maybe even a year, I think with Dr. Yellen, and I'm not a big fan of Dr. Yellen's, but what we have to do is understand who's on the helm, and she's on the helm. She is a dove, and she's going to make certain that she keeps, one, the yield curve as positively sloped as possible, and two, short rates as low as possible. So, no, rates are not going up in the short end of the curve for at least another year, maybe even longer. Inflationary expectations, which I'm not sure are well endowed, however, the public fears inflationary expectations may be sufficient to put interest rates at the back end of the curve higher, but even then, it would only be marginally so.
Last question, Dennis. Let's talk the PGMs. Palladium having a good run this summer. Are you liking the platinum group metals right now?
If you're going to have to be bullish of any of the metals in dollar terms, you're probably still better off being bullish of platinum and palladium than you are of gold or silver. There's still a shortage. The palladium market has gone at times to a backwardation, which is very unusual in the metals markets, telling you that supplies are extraordinarily tight, and they're likely to continue that way. So if the only way that you understand how to trade a commodity is in dollar terms, then I guess you have to be bullish of the platinum group metals, and primarily you have to be bullish of the palladium.
Dennis, as always, I enjoy speaking with you. Thanks for joining us today.
Daniela, always an honor. Thanks for having me on. Look forward to doing it again. And if I can put a plug in for those of you who want to take a look at owning gold in yen or euro terms, there are some ETFs listed on the New York Stock Exchange. GYEN, very simple, gold yen. GEUR, very simple, gold in euros. GBP, very simple, gold in the predicated in British pound sterling, and GGLE, that's gold in sterling, yen, euros, and dollars. So it's really a very broad cross.
Thank you, Dennis. Thank you so much for joining us.
Thanks, Danielle. Good. Thanks again for having me on. I look forward to talking to you again in the future.
Absolutely. And thanks for watching On the Spot with Dennis Gartman. Email us at newsfeedback@kitco.com and register for our newsletter, which sums up the best stories and videos of the week. You can do so at the link below. Thanks for watching.